Okay. Hi, good morning, and thank you everyone for joining us for the second month, and wherein we are going to tell you more about the performance of the last month and the previous month, in together both the months' performance, our strategy, and the major topic of this webinar is active. Management of PMS and during volatile markets, why it makes sense for active management. एक रिक्वेस्ट करूंगा सबसे कि सेशन को इंटरेक्टिव रखने के लिए पहले अपने आप को म्यूट पे रखें, और दूसरा, अगर आपको सेशन के बाद Q&A सेशन रखेंगे हम, अगर आपको इंटरेक्ट करना है, कुछ भी क्वेश्चन पूछना है मार्केट से रिलेटेड, PMS से रिलेटेड, आप चैट में क्वेश्चन डाल सकते हैं, हम उसको आंसर करेंगे। और फाइनली आपको मेरी स्क्रीन दिख रही है, अगर प्रेजेंटेशन दिख रहा है तो आप प्लीज चैट में एक थम्स अप दे। एवरीवन, आई वुड रिक्वेस्ट टू गिव मी अ थम्स अप or give me some kind of a confirmation. Okay, so the presentation is visible. Thank you so much. Thank you all. Okay. So, and on the call, I have with me Siddharth Purohit, who's the fund manager. He was there with us last call as well. And I'm the CIO. Again, I would request everyone to keep yourselves on mute. Okay. Yeah. So now that everybody is on mute, we can start the session. So major topic जो इस सेशन का है वो है कि volatile market में हम पोर्टफोलियो को कैसे स्ट्रैटेजाइज करें, और एक्टिव पीएमएस अगर हम करें तो वो एक्टिव पीएमएस एग्जैक्टली क्या होता है, और क्या ये एक्टिव पीएमएस करने से हमारे पोर्टफोलियोज के जो पोर्टफोलियो का जो डाउनसाइड है वो प्रोटेक्टेड होता है। इज आर डाउनसाइड एंड द पोर्टफोलियो protected if we enter into an active management of any fund? Could be a PMS, could be a mutual fund, could be any kind of a fund. So if we get into an active management, does it make sense in this current volatile market? Because we are seeing uncertainty, हम देख रहे हैं कि आए दिन मार्केट कभी 200 पॉइंट ऊपर होता है, कभी 200 पॉइंट नीचे होता है। और अगर हम वॉलेटिलिटी इंडेक्स की भी बात करें तो ये काफ़ी एलिवेटेड लेवल्स पे फिलहाल ट्रेड कर रहा है। और जब भी ऐसा सिनेरियो होता है, अनसर्टेनिटीज़ रहती है मार्केट्स में, और एवरी डे कोई ना कोई नया न्यूज़ फ्लो हमें आता है। मिडल ईस्ट से अभी फिलहाल सबसे ज़्यादा ट्रबल है हमें, जहाँ पे ऑन गोइंग डिस्टर्बेंस है, ऑन गोइंग वॉर है। कच्चे तेलों की दाम बहुत स्पीड से बढ़ रहे हैं, सो क्रूड ऑयल प्राइसेस आर गोइंग अप इन रैपिडली, and we know that is the major hit for our Indian economy. And in that backdrop, how do we position ourselves? How do we actively manage the portfolios to make sure that clients' portfolios downside are protected? Because our primary goal in the PMS is to protect the downside for our clients. हम सबसे पहले हम फोकस करते हैं कि क्लाइंट का जो डाउनसाइड है वो प्रोटेक्टेड हो ऐसे वॉलेटाइल मार्केट में। और जब एक मार्केट में अच्छा खासा एक बॉटम फॉर्मेशन हो जाए और ज़्यादा क्लैरिटी आए हमें कि चीज़ें अभी सेटल डाउन हो गई है, थिंग्स आर सेटल डाउन, मार्केट्स आर गुड टू go up again, that is the point of time when we can bet on high beta names, and we can generate higher alpha. But in the current market, it is important to do an active portfolio management. While the churn could be higher, leading to higher tax incidents, but it is also important to protect the downside. And one of the primary ways of protecting the downside is by active management. So we will talk about the volatility that is there in the market, and what are the advantages of an active PMS versus passive funds. What is our approach, and what happens if I just buy stocks which are hugging the index? By hugging the index, I mean मैं सिर्फ निफ्टी 50 या निफ्टी 100 के स्टॉक्स ले लेता हूँ अपने पोर्टफोलियो में और उसको रेप्लिकेट कर देता हूँ। अगर मैं वैसा करता हूँ तो उसके क्या ड्रॉबैक्स होते हैं, हम उसके बारे में भी थोड़ा सा बात करेंगे। और हम इन्वेस्ट वैल्यू कैपिटल में पीएमएस हम कैसे स्टॉक सिलेक्शन करते हैं, हमारा अप्रोच क्या रहता है, और लास्ट 2 महीने में हमने क्या किया जिसके चलते हमने सिग्निफिकेंट अल्फा जनरेट किया है बेंचमार्क्स को। फर्स्ट मंथ में हमने अच्छा खासा अल्फा जनरेट किया था, सेकंड मंथ में भी हमने अल्फा जनरेट किया। ओवरऑल सिंस इंसेप्शन हमने बेंचमार्क को बीट किया है लास्ट 2 मंथ में, और वो हम कैसे कर पाए हैं और आगे जाके हम क्या करने वाले हैं, उस पर भी हम वी विल डिस्कस मोर, जिससे कि आपको और क्लैरिटी आएगी कि हम आगे जाके अल्फा कंटिन्यूसली कैसे जनरेट करेंगे। हम बहुत ट्रांसपेरेंसी मेंटेन करते हैं, और वी मेक श्योर दैट वी कस्टमाइज एज एंड व्हेन रिक्वायर्ड, एंड फाइनली वी विल टेक questions for everyone. So yeah, and in between, Siddharth will chip in. He will talk more about how he identifies stocks using some of his advanced and experienced research. फॉर स्टॉक सिलेक्शन। इट्स अ बॉटम अप अप्रोच, वो आपको थोड़ा बहुत बताएंगे स्टॉक सिलेक्शन हम कैसे किए, थोड़ा बहुत मैं बताऊंगा। सो जॉइंटली वी विल डू दिस कॉल एंड वी विल मेक दिस इंटरैक्टिव फॉर ऑल ऑफ यू। सो जैसा मैंने कहा कि फिलहाल मार्केट एक बहुत ही वॉलेटाइल फेज से गुजर रहा है। वी हैव एंटर्ड इनटू एन एक्सट्रीमली वॉलेटाइल फेज वेयर वी रिसेंटली मेड अ पीक ऑफ 29 ऑन दी वॉलेटिलिटी इंडेक्स। ये वॉलेटिलिटी इंडेक्स क्या है? विक्स एक बैरोमीटर है जो कि एनएससी पे ट्रेडेड हो लिस्टेड है, ट्रेड नहीं होता है बट एनएससी पे लिस्टेड है। ये हमको ये बताता है कि मार्केट में कितना उतार चढ़ाव, व्हाट इज द वॉलेटिलिटी इन द मार्केट, व्हाट इज द रेंज इन द मार्केट एंड व्हाट इज द फियर इन द मार्केट। जैसे ही मार्केट में पार्टिसिपेंट्स का फियर और पैनिक बढ़ जाता है, ये वॉलेटिलिटी इंडेक्स में स्पाइक देखने मिलता है हमें। और जब ये वॉलेटिलिटी इंडेक्स में स्पाइक देखने मिलता है तो अनसर्टेनिटी भी बढ़ जाती है मार्केट में। और मार्केट में हम देखते हैं बहुत वॉलेटाइल मूव्स होते हैं। सडनली मार्केट 200-300 पॉइंट करेक्ट करते हैं, स्टॉक्स बहुत ज़्यादा करेक्ट करते हैं, कभी 20% 30% करेक्ट कर जाते हैं। और रिकवरी भी फिर वैसे ही शार्प रिकवरी भी होती है। जैसे कि लास्ट अगर हम मंथ की बात करें, अप्रैल मंथ वाज वन ऑफ द बेस्ट मंथ्स फॉर स्मॉल कैप इंडेक्स। So that was also significant amidst this volatility. The small cap index, the bounce back in the small cap index जो हमने देखा था लास्ट मंथ में स्मॉल कैप इंडेक्स में बाउंस, was one of the best months in last several years. So that also shows कि अगर आप एक्टिवली मैनेज करोगे इस वॉलेटाइल मार्केट में और आप राइट सेट ऑफ स्टॉक्स जो कि फंडामेंटली साउंड है आप पिक करोगे, तो आप रिटर्न्स और भी बना के दे सकते हो while protecting the downside. So in this scenario, while we are sitting currently, we have seen a massive jump in the VIX. Recent 52-week high was 29, और जब भी 29 का विक्स यूजुअली जाता है तो हम देखते हैं कि मार्केट में एक बॉटम भी बनता है। 29 to 30 के बीच में एक यूजुअली हमने देखा है कि बॉटम फॉर्मेशन हो जाता है। अगर हम उसकी चर्चा कर ले तो विक्स ने ऑलरेडी एक 29 का लेवल बनाया है, लेकिन अभी भी विक्स थोड़ा बॉल एलिवेटेड लेवल्स पे है हमारे कंफर्ट के हिसाब से। इट इज स्टिल एट एन एलिवेटेड लेवल, सो विच इज वाई वी आर स्टिल लिटिल कॉशियस ऑन द मार्केट एंड वी आर ट्रेडिंग विद कॉशन। निफ्टी में रिसेंटली 3500 पॉइंट का करेक्शन भी देखा है हमने। जैन से सिग्निफिकेंट डाउनसाइड देखने मिला था निफ्टी में। अगर हम मिड कैप स्मॉल कैप की बात कर ले तो समवेयर बिटवीन 30 to 40% का करेक्शन हमें मिड टू स्मॉल कैप में देखने मिला था जैन से। और उस बैकड्रॉप के सामने स्मॉल कैप इंडेक्स ने अप्रैल में बहुत बड़ा एक रिवर्सल भी दिखाया था। बट अगेन इस मंथ फर्स्ट 15 डेज ऑफ दिस मंथ हम देख रहे हैं कि वॉलेटिलिटी वापस आ गई है और मार्केट्स में करेक्शन वापस देखने मिल रहा है। स्पेशली अगर हम लार्ज कैप इंडाइसेस की बात कर ले तो उसमें सिग्निफिकेंट हमने करेक्शन देखा है। तो के बीच में वॉलेटिलिटी कंटिन्यूसली हाई है। नाउ जैसा कि मैंने कहा कि अगर हम एक्टिव मैनेज करते हैं और स्टॉक पिक करते हैं, बॉटम अप अप्रोच रखते हैं, ना कि हम सिर्फ इंडेक्स के स्टॉक्स खरीद के बैठ जाते हैं चुपचाप, तो उसके क्या बेनिफिट्स होते हैं, क्या एडवांटेजेस होते हैं, वी विल लुक एट दिस। So this graph that you see on your screen is telling you about what is the percentage of stocks in BSE 500। BSE 500 जो इंडेक्स है, 500 स्टॉक का जो इंडेक्स है, उसमें टॉप क्वार्टाइल में कितने स्टॉक्स ट्रेड कर रहे हैं अभी, कि माने टॉप 10% ऑफ द स्टॉक्स कितने हैं फिलहाल, और बॉटम 10% स्टॉक्स कितने हैं। अब अगर आप इंडेक्स 500 जो निफ्टी या BSE 500 जो इंडेक्स है, अगर हम उसके स्टॉक्स लेके पोर्टफोलियो बनाए सिर्फ, तो हमको मीडियन रिटर्न मिलेगा जो कि 11% का रहेगा। लेकिन अगर मैं एक्टिव मैनेजमेंट करता हूँ और अगर मैं एक्टिव मैनेज करके अच्छे स्टॉक्स पिक करता हूँ, तो आप देखो स्क्रीन पे जो ग्रीन बड़ा सारा बार आपको दिख रहा है, 72 स्टॉक्स ऐसे हैं जो टॉप 10% ऑफ दी क्वार्टाइल में लाई करते हैं। नाउ अगर मैं मेरे रिसर्च से इस 72 या फिर सेकंड जो क्वार्टाइल है विच इज 25%, टॉप 25% विच इज 8 स्टॉक्स अगेन, सो 72 + 32, अगर मैं ये 100 स्टॉक्स 110 स्टॉक्स पिक करूं इसमें से एक्टिव रिसर्च करके, देन आई विल बी एबल टू बीट द बेंचमार्क हैंडसमली। यही अगर मैं एक्टिव मैनेज नहीं करूं और रिसर्च करके थोड़ा चर्न ना करूं पोर्टफोलियो को, देन आई विल जस्ट बी एबल टू डिलीवर बेंचमार्क रिटर्न्स एंड वोंट बी एबल टू बीट द बेंचमार्क एट ऑल। बिकॉज आप देखो सिग्निफिकेंट स्टॉक्स आपके बॉटम क्वार्टाइल में भी है विच इज़ 42 एंड 18। सो ये बता रहा है कि एक्टिव मैनेजमेंट से आपको अपॉर्चुनिटी मिलती है। और जब ऐसा सिनेरियो होता है कि वॉलेटिलिटी बहुत ज़्यादा है, तो फॉर अस पीपल लाइक अस हु ट्रूली बिलीव इन रिसर्च, डूइंग डीप रिसर्च, हम इसमें एक्चुअली बेटर परफॉर्म करते हैं, क्योंकि हम इंटरेस्टिंग डेटा पॉइंट्स पिक करते हैं और उसके बेसिस पे फिर भी टेक आउट स्टॉक्स विच एक्चुअली हेल्प इन जनरेटिंग एन अल्फा। नाउ अगर मैं थोड़े डेटा पॉइंट के साथ बात करूं, तो अगर आपने एक लार्ज कैप म्यूचुअल फंड में पैसा डाल के रखा होगा पिछले 1 या 2 साल, तो 66% ऑफ द म्यूचुअल फंड्स वुड हैव अंडर परफॉर्म्ड द बेंचमार्क। यस, अगर आपने लार्ज कैप म्यूचुअल फंड इंडेक्स में पैसे डाल के रखे होंगे लास्ट 1 से 2 साल के बीच में, तो 66% म्यूचुअल फंड्स ने अंडर परफॉर्म किया है बेंचमार्क रिटर्न्स को, while you are constantly paying the fees. Now, this is where a PMS stands out, because concentrated portfolio होता है और एक्टिव मैनेजमेंट होता है, एंड रिसर्च टीम एक थीसिस के बेसिस पे स्टॉक सिलेक्शन करती है और फिर पोर्टफोलियो में ऐड करती है। अब हम इन्वेस्ट वैल्यू कैपिटल में क्या क्या टूल्स यूज़ करते हैं, क्वालिटी फिल्टर्स यूज़ करते हैं, जिससे कि हम जो बॉटम हाफ ऑफ दी स्टॉक्स है उसको कम्प्लीटली इरेडिकेट कर दे। तो हमारा 3 स्टेज फिल्टरेशन प्रोसेस है, जो कि सिद्धार्थ थोड़ा और डिटेल में इसके बारे में बात करेंगे आपसे। सिद्धार्थ विल टॉक मोर अबाउट यू with in detail about these 3 stages that we're talking about, where we clearly filter out weak cash flows, poor governance, expensive valuations, and we think before every rupee is deployed in any stock that we pick in the fund. So that is very important for us. So we have a proper 3 stage filtration process, because of which we have been able to generate this kind of an alpha that we have delivered in last 2 months. And we clearly identify the winners versus the losers. Like we have still not betting on any of the IT stocks, because we know that IT will continue to face disruption and continue to see down cycle, though it could be nearing a bottom, but it is not yet bottomed out. So we are still avoiding IT stocks. We know that energy, oil, energy, ये सब ऑयल एनर्जी एंड गैस रिलेटेड स्टॉक्स भी थोड़े वॉलेटाइल रहेंगे, क्योंकि हम जिस हिसाब से क्रूड ऑयल में स्पाइक देख रहे हैं, मैटर ऑफ टाइम बिफोर गवर्नमेंट विल गो अहेड एंड इंक्रीज मोर पेट्रोल एंड डीजल प्राइसेस। ऑलरेडी हमने देखा है कि कल एक छोटे मात्रा में डीजल और पेट्रोल प्राइसेस में हाइक हुआ है। आगे जाके चांसेस हाई है कि ये और भी ज़्यादा हाइक हो सकते हैं अगर क्रूड इसी लेवल पे रहा तो। So we have been negative on oil, gas, and energy for these reasons. Again, some of the FMCG स्टेबल कंपनीज, उस पर भी हम थोड़ा नेगेटिव है, क्योंकि वहाँ पे मार्जिन का इम्पैक्ट बहुत ज़्यादा रहेगा, एंड ऑलरेडी रहा है, और ये वॉर के चलते मार्जिन शायद उनके और ज़्यादा श्रिंक करेंगे, विच इज़ वाई वी हैव ऑल्सो नॉट looked at any of the FMCG staple companies. Sectors where we have actually betted on and which have delivered, पावर एंसिलरी हो गया, इंडस्ट्रियल्स हो गया, कैप गुड्स हो गए, फार्मा हो गए, डिफेंस हो गए, कैपिटल मार्केट प्लेस हो गए। सो दीज आर सम ऑफ द सेक्टर्स दैट वी हैव प्लेड ऑन, एंड दैट दीज हैव रिवॉर्डेड अस हैंडसमली बिकॉज ऑफ द प्रोसेस दैट वी फॉलो। नाउ ये आपको एक्चुअली बता रहा है कि ओवर अ पीरियड ऑफ टाइम हाउ मेनी एक्टिव वर्सेस, अगर हम पैसिव फंड्स देखें तो उसका ड्रॉबैक क्या होता है, और किस हिसाब से म्यूचुअल फंड्स अंडर परफॉर्म करते हैं। सो अगर मैं 1 साल की बात करूँ, तो जैसे मैंने कहा, लास्ट 1 साल में 66% ऑफ द म्यूचुअल फंड्स हैव अंडर परफॉर्म द बेंचमार्क। 3 साल में 74% ऑफ द म्यूचुअल फंड्स हैव अंडर परफॉर्म द बेंचमार्क। लास्ट 5 years में 81% ऑफ द म्यूचुअल लार्ज कैप म्यूचुअल फंड्स हैव अंडर परफॉर्म द बेंचमार्क। दैट इज बिकॉज दे डोंट हैव एन ऑप्शन, इट्स नॉट देयर फॉल्ट कंप्लीटली, मैं नहीं ब्लेम करूंगा फंड मैनेजर्स को, बट बिकॉज वो इतने बड़े साइजेबल AUM के ऊपर बैठे रहते हैं, और उनको बहुत सारे स्टॉक्स पोर्टफोलियो में ऐड करने पड़ते हैं, उनको उस चक्कर में वो उतना ज़्यादा एक्टिव मैनेज नहीं कर पाते, जिसके चलते आपको अंडर परफॉर्मेंस देखने मिलता है। एंड लास्ट 1 year में 46% ऑफ मिड एंड स्मॉल कैप mutual funds have also underperformed the benchmark. Now, this is where PMS stands out, where we do an active management, because customization होता है बहुत high, concentrated portfolio होता है, जैसे हमने करके रखा हुआ है। सिर्फ 17 स्टॉक्स है एज ऑफ नाउ, एंड एट एनी गिवन पॉइंट ऑफ टाइम हम 22-23 स्टॉक्स ही रखने वाले हैं PMS में। तो वो बहुत कॉन्सेंट्रेटेड, एक्टिवली वॉच्ड, मैनेज्ड रहने वाला है, जिसके चलते हम क्विक एक्शन ले पाएंगे और उसमें एक अल्फा जनरेट कर पाएंगे। ट्रांसपेरेंसी मिलती है हमारे इन्वेस्टर्स को, उनको पूरा होल्डिंग उनके ही डीमैट में रहता है, तो उनको पूरा मिलता है। एंड वी ऑल्सो फोकस ऑन क्वालिटी एंड वैल्यू, जस्ट नॉट ऑन इंडेक्स को, मुझे इंडेक्स को रेप्लिकेट करना है या मुझे सिर्फ वैल्यू फंड देखना है, वैल्यू स्टॉक्स देखने हैं। वी लुक एट ऑल पैरामीटर्स, क्वालिटी, वैल्यू, ग्रोथ, एंड देन वी पिक स्टॉक्स। एंड लाइक आई मैंशनड, अगर हम एक्टिव मैनेज करेंगे, तो डेटा भी ये सजेस्ट करता है कि लास्ट 10 साल में एक्टिव मैनेज्ड PMSs हैव बीन एबल टू जनरेट अ CAGR of 40%. Yes, anywhere between 20 to 40% is the kind of CAGR a PMS has generated if in last 10 years अगर एक्टिवली मैनेज होता है। वहीं पे अगर मैं एक म्यूचुअल फंड या फिर एक्टिव फंड की बात, पैसिव फंड की बात करूँ, तो वो 12 से 13% के ही रिटर्न दे पाता है। 79% ऑफ द PMSs हैव बीन एबल टू बीट द बेंचमार्क इन लास्ट 10 years एज पर PMS बाजार डेटा। सो दिस शोज अगर एक एक्टिवली मैनेज्ड PMS रहता है तो वो कैसे एक अल्फा जनरेट कर पाते हैं हमारे इन्वेस्टर्स के लिए। Now, this is a question that I get asked by a lot of our investors and a lot of investing community wherever I go and do a webinar or a session that I hold। मैं कहीं पे भी जाता हूँ कॉन्फ्रेंसेज में, एक मेरे पास ये क्वेश्चन ज़रूर आता है कि क्या एक्टिव मैनेजमेंट के मतलब एक्टिव हाई चर्न भी होता है। टू सम एक्सटेंट येस, अगर मैं एक्टिव मैनेज करूँ अगर पोर्टफोलियो को तो थोड़ा हाई चर्न भी रहेगा पोर्टफोलियो में। और क्या करेंट मार्केट सिनेरियो में जस्टिफाइड है एक्टिव चर्न करना, थोड़ा हायर चर्न करना? बिकॉज एट द एंड ऑफ द डे इन्वेस्टर्स को एक शॉर्ट टर्म कैपिटल गेन का इंसिडेंस भी आता है। एंड अगर मैं उसको एक बार साइड कर दूं तो येस इट मेक सेंस इन दिस current environment where markets are so volatile to go for an active management which will involve slightly higher churn, because like I mentioned, as the data suggests, 77% of the PMSs have been able to beat benchmark over 10 years, which includes COVID times, which includes rate cycles, geopolitical tensions, and the demonetizations that we had seen, because they have actively been able to churn the portfolio, which is why they have been able to exit, understand that markets थोड़े volatile है, it doesn't make sense to invest in companies जो कि थोड़ा डाउन जाएंगे, तो एग्जिट करते हैं, कैश पे बैठते हैं, और जब राइट अपॉर्चुनिटी मिलता है तो वापस डिप्लॉय करते हैं। तो उस चक्कर में 77% of the PMSs have been able to beat the benchmark. Now, average outperformance is 72 basis point as compared to BSE 500 in August 2024, which was one of the most volatile the Nifty 50 in to September 2020 to correction, where Dow had fallen 8% and S&P also had fallen 8%. And the 3.6% is the average alpha that a PMS, active managed PMS, generates over Nifty 50 over a 5 period time frame. So almost around 19% on an average एक PMS return देती है, CAGR return, versus a 15% return on a Nifty 50. And 68% of the fund managers now are saying that active fund management is what is required in current environment because of the high volatility and elevated inflation levels and a rate cycle which can also take a U-turn now. Now, by active churn, I also mean intelligent churn. Not just because I'm sitting on a decent profit, I will exit the company. अगर मुझे अभी भी फंडामेंटल्स स्ट्रॉन्ग लग रहे हैं, कंपनीज के आगे ग्रोथ प्रोस्पेक्ट दिख रहा है, इवन इफ आई एम सिटिंग ऑन अ 50-60% काइंड ऑफ अ गेन ऑन अ कंपनी, और अगर मुझे लग रहा है कि आगे जाके इसमें ग्रोथ कंटिन्यू होने वाला है, मैनेजमेंट अभी भी बहुत कॉन्फिडेंट है, स्ट्रॉन्ग ऑर्डर बुक है, the financials are strong, why will I look to exit that company? I will continue hold that company. Rather, for me, by churn, what I mean is intelligent churn. Exit when valuation target is hit. रोटेट ऑन अर्निंग थीसिस ब्रेक। सो अगर हमने कोई थीसिस पे कोई स्टॉक को खरीदा है और अगर वो थीसिस सब होल्ड नहीं करती है तो फिर मैं एग्जिट करूंगा। अगर कोई गवर्नेंस रेड फ्लैग हुआ है तो मैं चर्न करूंगा। और अगर फंडामेंटली कुछ इरोड हो रहा है कंपनी में तो मैं उसको चर्न करूंगा। नॉट जस्ट बिकॉज देर इज नॉइज इन द मार्केट आई विल लुक टू चर्न, और बिकॉज मुझे लग रहा है कि बेंचमार्क करेक्ट हो गया तो मेरा पोर्टफोलियो भी करेक्ट होगा तो मैं चर्न करूंगा। So idea is not to just go on high churn. Idea is to do intelligent churn, and when we get into an intelligent churn, that is when we will be able to beat the benchmark handsomely. सो फॉर अस व्हाट इज इम्पोर्टेंट, हम क्या फॉलो करते हैं? अगर कोई भी टारगेट वैल्यूएशन टारगेट हिट हो जाता है, हमने जिस कंपनी को खरीदा था, तो हम एग्जिट करते हैं। अगर हमारा भी अर्निंग्स थीसिस ब्रेक हो जाता है तो हम एग्जिट करते हैं। बेटर रिस्क एडजस्टेड आइडिया। सो देर आर ऑल्सो टाइम्स व्हेन विद इन वन सेक्टर और मे बी फ्रॉम अदर सेक्टर, अगर हमको कोई स्टॉक आइडिया या फिर कोई सेक्टर अच्छा लग रहा है, बिकॉज वी फॉलो अ बॉटम अप अप्रोच, तो पहले हमको स्टॉक आइडेंटिफिकेशन हम करते हैं। तो हम उसमें हमको अगर कोई ऐसा कंपनी आइडेंटिफाई हुआ है जिसमें कि बेटर रिस्क एडजस्टेड हमको रिटर्न मिल रहा है एज कम्पेयर टू द करंट स्टॉक इन आर पोर्टफोलियो, देन वी ऑल्सो लुक एट doing and churn. And to protect downside, there are certain limits that we look at on sector limit, stock limit, group company limit. So if any of that limit is hit, then also we look at churning. So for us, all these parameters are important, not just some churning the portfolio, but on the basis of fundamentals, on the basis of risk adjusted, and on the basis of any stock hitting the weight limit that we have. So we have certain limits as far as exposure to any company is concerned. We don't deploy deploy more than 20% on any single company, will not deploy more than 20% in one particular sector, and will not deploy more than 20% in any one group company. The reason being because I don't want to get stuck if there is a downward cycle which is starting in that particular sector, or that particular group company starts to fall because of some negative news flow. I don't want to get stuck with a large exposure in that sector or that group company. Rather, I will look to exit quickly. If I have a smaller exposure, the portfolio also takes a smaller hit. So, which is why we have these limits on taking a exposure to any particular stock company, stock sector and group. नाउ अगर कोई पोर्टफोलियो इंडेक्स को हग करके चलता है तो उसके सबसे बड़े ड्रॉबैक्स क्या है? आप फीस पे करते हो, बट अगेन निफ्टी 50 को भी बीट नहीं कर पाता है इंडेक्स। अगर मैं पैसिव इंडेक्स फंड्स की बात करूं, द टॉप 5 निफ्टी स्टॉक कॉन्सेंट्रेशन एक्चुअली comprises of 40% of the weight. So there is actually no proper diversification. If you take a look at the Nifty 50 composition, the top 5 to 6 companies in Nifty 50 actually contribute 40 to 45% of the weights. And if those top 5 to 6 stocks don't perform, which is actually the case right now, if you take a look at names like Reliance, names like TCS, names like HDFC, which are slightly heavyweight on the index, because they are not performing, Nifty 50 itself is not performing at all. And if you actually look at taking exposure to the top stocks in the Nifty 50, you would have underperformed big time because of these reasons. And then there is no protection in case of correction index. If it falls by 15 to 20%, your portfolio also takes a hit if it's a index hugging fund that you're looking at. And there is very small likelihood of generating a structural alpha over a longer period of time if you're looking at creating a portfolio which is just hugging the Nifty and not looking at deeper insights about the sectors and the stocks within the Nifty 50, or say if you increase your horizon to Nifty 200 or BSE 200 500 as well. सो ये एक डेटा सेट है 2010 से लेके 2025 तक कि हाउ मेनी एक्टिव सो लार्ज कैप एक्टिव फंड्स, how many number of large cap active funds have been able to beat the benchmark indices. In 2010 there were 83 actively large cap managed funds we were beating indices, and now in 2025 it has gone down to only 35 large cap active funds which have been able to beat the benchmark index. So there is a constant declining trajectory of actively large cap managed funds which are hugging the index to beat the index. From 83 in 2010, it has constantly declined to 39 by 2025. So these are some of the reasons why they have not been able to outperform, is because they hug the index. And like I mentioned, top 5 to 6 stocks contribute to 45% of the weight. Now, अगर actively managed portfolio होगा तो if they are not bound to follow index weights, sector constraints, not bet on high concentration when quality is not in favor, value is in favor, and vice versa. And drawdown awareness, you know that markets are going through a drawdown. You protect your portfolio by exiting early and sitting on cash. Now, for the this slide, maybe probably I'll ask Siddharth to chip in while I take a small break and explain our investment philosophy and research philosophy and stock picking as well. Over to you, Siddharth.
Yeah, yeah. Hi. Thanks, Aditya, and welcome everyone to this webinar. So Aditya has already explained our strategy. I would like to highlight the basic philosophy based on which we construct our portfolio, and the way we select our stocks which can fit into our portfolio. So the ability of any company to deliver consistent returns to its shareholder depends on a lot of factors, but primary three factors which really matters is the longevity of growth, the ability to generate cash flow consistently, and the ability to redeploy the capital in an efficient manner. And this is the core philosophy and the principles that even we adopt while choosing our stocks in the portfolio. So when I talk about growth, many companies might go through multiple phases of growth, but longevity of growth is the primary criteria which market looks at, and that is what is rewarded on a consistent basis. So any company which has a product profile which has the ability to get a superior pricing power will have a stronger growth prospect for multiple years, and that will be rewarded by the shareholders in the going ahead in the long term. Uh, in our portfolio, that is one of the primary criteria that we look for. And while looking for growth, we don't look at any particular sector. The stock might come from any sector, and that's why we are sector agnostic. Any sector which is able to deliver growth for multiple years can fit into our portfolio. Uh, then we try to always avoid cyclical companies because cyclical sectors always tend to deliver very superior growth for a brief period of time, which is very difficult to time. And that is dependent on too many factors, which is difficult to judge when it will turn against you. So while you can make a very quick money in cyclical sector, it is equally possible that you'll get trapped when the sector turns against you. So it's always better to avoid those sectors which are very cyclical. Maybe very commoditized metal, maybe sugar, or maybe certain sectors which are very highly dependent on government projects, maybe infrastructure and road construction kind of things, which I feel is not a very long-term growth story as far as shareholders are concerned. The company might do good for a brief period of time, but if there is no sustainability of growth, then market doesn't reward them, even if the growth looks good for 1 or 2 years. Now, the second most important criteria is cash flows. Now, why we give so much of importance to cash flow is that a lot of companies end up compromising with their balance sheet to impress the shareholders by delivering superior growth. But if a company is delivering very strong growth but their working capital cycle is eating out to their profitability, then shareholders eventually don't make money, because somewhere down the line your money gets stuck up in the form of higher inventory, or maybe debtors. And many cases we have seen that those you are basically getting trapped into a high growth phase, but you are not able to realize those money into true profits. So cash flow conversion is very important. So it is a very debatable thing that how much cash flow conversion should be there. But naturally, there is a threshold which one has to look forward, and we have that. We'll talk about that later on. And talking about cash flows, it's very difficult that you find companies with a very consistent cash flow, maybe 5 years, 10 years. There will be years that there will be a suppression of cash flow or maybe negative cash flow. But ideally, if a company is able to deliver positive cash flow, 3 out of 5 years, it is good enough for our criteria. Now, we try to avoid companies which adopt very aggressive accounting policies. Just to give you an example, what aggressive accounting policies can be. There are many companies which are in the expansion phase. They have a tendency to capitalize the interest cost. In true sense, if you say, they normally capitalize that interest cost to the cost of the project. So even if there is a debt piling up in the book, the shareholders and the investors are misled in the form of that interest outgo is not there, but actually debt is piling up in the balance sheet, which is not visible. So that's a wrong practice, I would say. Another case is companies which have very high intangibles on their book. So in many cases of acquisitions and merger and acquisition, we have seen that company end up piling up a lot of intangibles and goodwills on their book, and the amortization policy sometimes hit the shareholders in a very bad way, which should be avoided. So we try to avoid those kind of companies. Now, capital allocation is the third most important criteria that we look at. When I talk about capital allocations, certainly ROCE comes to our mind. So any company which is not able to generate ROCE above its cost of capital is not a good company to our criteria. And generally in India, the cost of capital would be somewhere in the range of 9 to 11%. So ideally, ROCE above that is good enough. But in our case, we try to look at companies above 13 to 15% ROCE, which makes a good investment case. Now, when I talk about cash generation, we look at another important factor, that is cash inflow is important, but cash outflow also should be checked. That's a proper test of the company, I would say, because if a company is generating good amount of cash, how they are reinvesting. If they are not reinvesting, or if they don't have immediate need of capital, it should be given back to shareholder. If you don't have a major capex lying ahead, and you have already generated substantial amount of cash in the last few years, it should be given back to the shareholder in the form of dividend, even if it is less amount, and or maybe in the form of some sort of buybacks or so that is important criteria that one should look at. Another criteria that we look at is that growth is definitely important, but growth at the cost of higher capital is not really good for shareholder, because if a company keeps on adding capacity but they keep on hitting the capital market for very frequent dilution, then shareholders don't make money, because the minority shareholders get diluted. So that should be completely be avoided, and that is very important criteria that we look at while selecting our stocks. So these are the core three factors that we look at, and we are driven by the philosophy for selecting the stocks in our portfolio. Now, how we select basically stocks in our portfolio. There are more than 2,000 companies listed in the NSE, but if you practically speak, then not more than 500 companies are worth investing in India. So broadly, if you look at BSE 500 makes a good case for to study. So we study BSE 500, not necessarily always BSE 500, but normally the top 500 companies, and try to filter out companies which fit into our criteria. So we have differentiated companies based on multiple parameters, and we look at certain parameters, and eventually try to build a portfolio of 15 to 30 stocks. So the first criteria that we look at is growth, as I talked about. So what we look at is a company which has a consistency of growth. And when I talk about consistency, maybe 3 out of 5 years it should have delivered a 15% growth in terms of top line. And we don't like companies which deliver 50% kind of a growth one year, and the next year it ends up doing a negative growth. So we would like consistency more than the absolute growth. Then earnings consistency. When I talk about, there might be certain cases that a company might go through certain phases of difficulty because of external challenges, and there might be a kind of temporary blip. But if the business model is strong enough, then it can be given a benefit of doubt. If the past history of that company has a record of delivering growth. Uh, then we already talked about in the previous PPT that we try to exclude companies which are very cyclical in nature, but we try to figure out companies which are on the verge of coming to a new phase of growth, and and are has the ability to kind of outperform other sectors which has not really been performing for multiple years in the past. But if they are really in the phase where there are a lot of government actions happening, or maybe the macro tailwinds is supporting those sectors, they fit into our criteria. Now, the second filter that comes to our mind is quality filters after growth. So in quality, we always look at ROC, as I talked about in the previous PPT, that any ROC above 15% we believe is good enough in the Indian business context. So if any company has a tendency to deliver consistent ROCE of 15% plus, then that's really a good case for investment. FCF conversion above 70% is something very strong, I would say. What it indicates is that, basically 70% of your EBITDA, that is your operating profit, is getting converted into cash flow. What it indicates is that you are basically making profit, and also that money is flowing into your balance sheet. You are not getting stuck up in the form of higher working capital. And Why I talk about working capital again and again is because many a times your reported revenue is a function of how much sales you do, but your sales doesn't mean that you have actually received the money. your money might be remaining idle in the form of higher debtors, which you may receive today or maybe after 1 year, or sometimes part of that might get defaulted as well. So if you are getting the money back, or which is maybe is a reflection in the form of cash flow conversion. So if you are able to get anything above 70% of your money back, which is in the form of cash flow, then it's a very strong business model, I would say. Now we look at also companies which have a strong balance sheet, or maybe in the form of debt to equity ratio. We like to have companies which have lower debt to equity ratio, and less than one, for largely for manufacturing companies. Now, another point which normally is a lot of times looked not given too much importance, but corporate governance, soft corporate governance, I would say, that there should be largely no promoter pledge, or least promoter pledge, even if it is there, because it shows the weakness or the promoter, that maybe there is something where which is missing out in terms of the numbers might be looking good, but if a promoter has placed large amount of his shareholding, then there is a kind of stress which is invisible to your uh, balance sheet and P&L, but the promoter is facing some issues. So we like to avoid those kind of companies. Then obviously the competitive moat assessment, where the company should have multiple years of growth and pricing power, etc. Now, the third factors that comes to our mind is valuation. So we don't start with valuation. We start with growth, then quality filters, and then comes to valuation. So in valuation filter, eventually, in the first phase, from the 500 companies, we come to we select a list of 150 companies, and the quality filter comes down to 60 companies. And the valuation criteria, when we run, we normally reach a company's list of company which is in the range of 15 to 30. So we look at margin of safety. That means there should be intrinsic value in the company when we are buying it. And so we don't want to overpay for any company, irrespective of the growth. Because in bull market it's fine, but in a stagnant economy, your P can be sometimes be a double-edged sword, where your trailing P looks attractive, but sometimes even the forward P is expensive, because the growth might be tapering down. Just to give you an example, if a company is trading at 30 time P multiple, or maybe 25 time P multiples, it looks attractive. But if the growth is tapering down from a previous record of 25%, if the growth is tapering down to 10%, then the forward P looks rather expensive in that case. So one has to look at very carefully, and not just look at the P in a plain vanilla way. Then price to FCF, free cash flow conversion, is very important. EV to EBITDA, because if it's a capex oriented company, normally one should not look at in P terms only. One has to look at in EBITDA terms, because and EV terms, because EV also incorporates debt and cash that you have in the book. Then certainly the earnings catalyst of any sector that we look for. And uh, certainly after all these factors are considered, then we look for how much positioning we should look at in that particular stock, and what is the liquidity that stock has. So it's a mix of all the factors that we look in, and we make a portfolio of strong 15 to 30 stocks, so that we generate healthy returns for our uh, uh, investors. So I would like to ask Aditya to take forward here.
Thank you, Siddharth. So I was just mentioning about the risk parameters that we look at the start of the session. तो उस पर थोड़ा सा और डीप डाइव जाना चाहूँगा मैं, और थोड़ा सा एक टच पॉइंट करके बताना चाहूँगा कि हाउ हम रिस्क को मैनेज करते हैं. सो लाइक तो सिद्धार्थ वाज मेंशनिंग कॉर्पोरेट गवर्नेंस इज समथिंग दैट वी look at very closely, and anywhere where we find red flags in corporate governance, हमको अगर कहीं पे भी रेड फ्लैग दिखता है कॉर्पोरेट गवर्नेंस में, तो हम वो स्टॉक्स को completely अवॉइड करते हैं, ड्रॉ डाउन कंट्रोल करते हैं हम. पोर्टफोलियो को एवरी मंथली मॉनिटर करते हैं, उसके जो रिस्क पैरामीटर्स होते हैं उसको वीकली मॉनिटर करते हैं, जैसा कि शार्प रेशियो हो गया, बीटा हो गया, और मैक्स ड्रॉडाउन पोर्टफोलियो का पूरा हम उसको हर वीक ट्रैक करते हैं। और अगर मंथली हम पोर्टफोलियो लेवल के ड्रॉडाउन्स को भी मॉनिटर करते हैं, और अगर कहीं पे भी पोजीशन 20% से ज़्यादा फॉल करता है कोई स्टॉक में, तो वी टेक इमीडिएट एक्शन इन दैट। And because if the stock is falling by more than 20%, then there is something definitely wrong in that company. The first action is to look at what is happening in that company and then accordingly take a call to exit. लाइक आई मेंशन, कंटिन्यूअस मॉनिटरिंग, हम रियल टाइम ट्रैक करते हैं, अर्निंग्स को ट्रैक करते हैं, क्वार्टरली नंबर्स अब जब आने लग रहे हैं उसको हम बहुत क्लोजली ट्रैक कर रहे हैं। और जैसे कि हमारा एक बाइंग का स्ट्रैटेजी है, डिप्लॉयमेंट स्ट्रैटेजी है, सिमिलरली हमारा वी फॉलो एन एग्जिट स्ट्रैटेजी एज वेल इन केस ऑफ ऑल स्टॉक्स, कंपनीज and the portfolio overall. And like I mentioned, we keep a track of all the risk parameters in terms of beta. So we make sure that the beta of our portfolio is closely hugging the index or slightly lesser than the index, so that downside is protected, and the moment upside resumes, upcycle में हम थोड़ा बीटा हाई प्ले करके we can generate a significant alpha. Liquidity is something जो हम again बहुत closely monitor करते हैं, because I know for me buying and exiting is very very important. और अगर मैं कोई स्टॉक खरीद पा रहा हूँ और उसको बेच नहीं पा रहा हूँ, तो वो सबसे बड़ा एक मेरे लिए चैलेंज बन जाता है। तो फॉर दोज रीजंस हम मेक श्योर करते हैं कि मिनिमम लिक्विडिटी क्राइटेरिया फिल्टर्स हो, और उसी के बाद स्टॉक फिल्टर होके हमारे प्रोसेस में निकलता है, और फिर हम उसको फिर पोर्टफोलियो में ऐड करने के लिए देखते हैं। लाइक आई मेंशन, कॉन्सेंट्रेशन कैप्स हम रखे हैं। कोई सिंगल स्टॉक में हम 20% से ज़्यादा एलोकेट नहीं करते पोर्टफोलियो में। बाय दैट आई मीन, डू नॉट मीन कि मैं 20% वन गो में कोई एक स्टॉक को एलोकेट कर देता हूँ। बाय दिस आई मीन, से फॉर एग्जांपल मैंने 10% ही एलोकेट किया कोई पर्टिकुलर स्टॉक को, एंड द स्टॉक वेंट अप मोर देन 100% ओवर अ पीरियड ऑफ टाइम, तो उसका एक्सपोजर इन माई पोर्टफोलियो विल बी मोर देन 20%। इन दैट केस आई विल ट्रिम डाउन माई एक्सपोजर इन दैट स्टॉक to make sure that it is not in excess of 20%, because after such a sharp run up also there are high chances कि एक थोड़ा cool off वो stock में आएगा for sure, and we should look to book out some profits. So for those reasons also 20% का cap रख के रखा है। Like I mentioned, no single sector I will put more than 20%, so 20% का एक single sector cap भी रखा है, so that in case the cycle turns, because we have seen in current market scenario, or rather with so much of information around, the sector churn is very high of late। अगर आप post covid देखोगे, मार्केट्स में सेक्टर चर्न हैज बिकम सो हाई दैट इफ यू आर नॉट निम्बल फुटेड और आप सेक्टर को बहुत ज़्यादा एक्सपोजर लेके रखोगे, तो फिर चांसेस आर कि आप वो सेक्टर के डाउन साइकिल में आप स्टक हो जाओगे, एंड सम अदर sector which is outperforming, you will not be able to take exposure to that sector. So for those reasons, we have kept a sector cap also at 20%, and no group company I will allocate more than 20% for obvious reasons, because we have seen कि अगर कोई भी एक ग्रुप कंपनी में कोई एक नेगेटिव न्यूज़ आ जाती है, या फिर कोई एक्सटर्नल सोर्सेज से कुछ एक इंफॉर्मेशन लीक होती है, तो फिर पूरा ग्रुप कंपनी टेक्स अ हिट, एंड वी डोंट वांट टू फॉल ट्रैप ऑफ दैट, which is why we have kept this filter of 20% on sector, stock and group company. And like Siddharth was mentioning, when we are looking at buying companies which are rich in valuations, we also look at selling companies when they reach their valuation peak, regardless of the momentum. Though momentum can take the stock 4 to 5% more higher, but we don't want to fall trap of that 4 to 5% upside, because the moment people start monitoring or identifying that the valuation has reached its peak, stock also takes a sharp downside, and for me, to sell during those point of time becomes extremely difficult. So which is why we, more than momentum, we look at valuation reaching its peak, and the moment we see that, we will start booking out profits and prevent holding overvalued names or for emotional reasons. So हम सबसे पहले तो ये एलिमिनेट कर देते हैं कि हमारा इमोशंस इन्वॉल्व ना हो स्टॉक पिकिंग में। अगर हमको कोई कंपनी अच्छी लगी, हमने उसको थीसिस बनाया और थीसिस सक्सेसफुल हुआ, हमने लिया, or but some for some reason over a period of time that thesis is not proving as we had identified or worked on, then emotions are set aside and we make sure that a hard stop is taken, and stocks are exited. So these reasons, we actually are able to manage risk properly. And yes, we also look at staggered deployment, so we don't deploy the money in one go in our fund. So we have designed our deployment strategy after deep research. and we follow a staggered deployment strategy wherein we first deploy 50% in one go. Then after a period of 10 to 15 days, we deploy 20% in a staggered manner. Then again, after a period of 10 to 15 days, we deploy another 15%. So 85% of your money gets deployed over a period of 25 to 30 days. And the balance money which is left of 10 to 15% also gets deployed over a period of next 15 days in a staggered manner, either in case of a market correction, deeper market correction, or in case of a compelling stock idea that we have identified, which offers an excellent risk to reward. Then we deploy some money in that stock, और otherwise हम वो पैसे को stagger करके existing portfolio में ही हम deploy कर देते हैं. So ये deployment strategy के चलते भी we have been also able to beat the benchmark handsomely. Now, talking about portfolio positioning and characteristics, probably I'll again ask Siddharth to chip in a bit and
Yeah,
talk about how we have played stocks and sectors recently in last 2 months, which have helped us.
yeah. So, how we have positioned our portfolio and what is the composition I would like to highlight. So broadly speaking, a healthy economy should have a strong domestic capex and a strong domestic consumption as well as savings and export. So should be the portfolio. So India Winners portfolio is carefully structured around these three pillars of economy. That is our domestic capex, domestic consumption, and savings as well as exports. When I talk about domestic capex, we have positions in industrials companies which are catering to both government led projects as well as private sector capex, and will benefit from multi years kind of investment that India is seeing. So when I talk about infrastructure, we don't mean only it's about the civil infrastructure construction. India is in the mid of a multi-year capex cycle. Even if you might not see it in the numbers because the private capex cycle is yet to pick up, and the large heavy lifting is being done by government in the last 5 6 years since COVID, and government has been spending up. Of course, there has been some sort of slowdown the last 1 year because of relatively less kind of uh, FDI inflow, but companies which are largely going to benefit from domestic capex have featured in our portfolio. And secondly, domestic consumption is something what really attracts us. When we talk about consumption, it doesn't have to be only the pure FMCG companies, what normally people think about. So we look at companies which are in the premium end of consumption and are able to capture the premiumization theme in India. Maybe be it auto, be it normal consumer, maybe electronics. So companies at the higher end of business are not seeing much stress, but to our understanding, in the lower end, or maybe the at the low price point, are seeing some sort of not so much of healthy growth. So we have positioned our portfolio around them. Then the third part of any economy has to be in the form of export or quasi exports and savings. So when I talk about exports, for multiple years we have been hearing about China plus one strategy. In some sectors it has played out, some sectors it has not yet played out, but it is certainly going to play out, because in the last few years global corporations have large companies have experienced that depending on one economy is not going to solve their problem, and they end up losing their bargaining power. And excessive dependency on China has created a supply chain risk for a lot of manufacturing companies in Europe and US. But why India has not really benefited in a big way is that Indian companies had not invested in large capex pre-COVID. It's only that post-COVID that the manufacturing started picking up in a big way because of a lot of PLI schemes came into India, and the government started giving a lot of boost to companies which are actively pursuing export opportunities. So that is one area that we look forward. And so we have positioned our portfolio, our in companies which replicate all these three, which domestic capex, domestic consumption, as well as savings and export. So what our portfolio looks like in terms of quality and earnings. So broadly speaking, in a normal market environment, the portfolio returns is primarily driven by how much the your portfolio earnings grow. So we expect our portfolio, model portfolio, to grow by 13 to 15% over the next 2 3 years on a conservative side. If inflation remains under control and those set of companies are able to follow the discipline, it might result even in a better earnings growth. And so naturally, if earnings growth is in that trajectory, it is highly possible that your portfolio returns should mimic that growth. That's what ideally the thumb rule is. While no one can comment what can be. So ideally, our positioning is always based on the earnings growth and not on the portfolio returns. So
So
the,
that is being little conservative here by saying 15 to 13 to 15%. But I can tell you the returns will be much higher than this,
yeah.
probably in in 20s somewhere.
Yeah, so I would like to clarify is that in an expansionary phase of economy, market tends to reward maybe 1.5 times, maybe 2x of earnings growth. So all depends on the liquidity in the market. So I was just trying to highlight that normally in a normal scenario, that's a base case scenario, right? So and the broad portfolio returns return on equity is in the range of 13 to 15%, which is healthy to our understanding. We also try to look at companies which have a dividend history in the range of so our model portfolio has a dividend yield of 0.5 to 1%, which doesn't add in a big way to the returns, but it ensures that the company that we are buying has a track record of paying dividends, which shows that they are genuinely making profits. Now, coming to portfolio P stands at 38, which indicates kind of that market is pricing them on a higher side because of that quality of growth and consistency of growth. So, so that's all about the portfolio positioning. And now I'd like to talk about the portfolio composition and what are the sectors we are holding in terms of uh, in our portfolio. Uh, Auto and auto ancillary is what we have positioned to some extent. In auto and auto ancillary, a lot of discussion goes around what is the volume growth in the Indian markets. But clearly, right now, it's not only about the volume growth in the auto industry. It is a case of premiumization. We have seen that mid and higher end of auto sales are in a strong footing, while the lower end of the auto sector is not really growing too much. So companies which are has the position to generate higher content per vehicle in the form of higher safety norms or maybe new features. Those are the companies which are going to benefit a lot, and that trend is already visible in their earnings. So we are positioned in some of those companies in our portfolio. In consumer, we have exposure to companies which are into tech enabled, I would say eyewear and some FMCG company where the companies are using technology to expand and tap vast untapped opportunity in India. The eyewear market in India is largely unorganized, and there are very small shops around every cities. So broadly, there's a very big opportunity for those companies to tap for the multiple and keep on expanding for multiple years. In the FMCG company I'm talking about, we have not invested in companies which are directly into B2C, which doesn't have much pricing power, and they end up getting uh, like you know uh, into phases of very low growth. But it's a company which is into contract manufacturing to the global suppliers and in the premium end of the market. In the specialty chemicals, we are positioned in our portfolio towards certain companies which are of pharma grade with a multi-year track record and multi-year visibility, having strong pricing power, and they are supplier to a lot of large giant pharma companies for their key starting materials and APIs. So even though they are classified as chemicals, they are basically pharma grade chemicals, and they are not basic chemicals, and that's why they form a very strong part of the value chain. So they can't be avoided by the global players, and that's why we believe that they are in a phase of high growth for multiple years going ahead. Railway themes is something we have played out very carefully. We have not played out in the direct railway companies, but companies which are supplying critical railway components and equipments. Because as you see, and most of you might have seen that there is a trend of premiumization in the Indian Railway. We have seen in the last few years, and a lot of Vande Bharat trains are coming up. So as you get into high speed trains, then naturally the engineering and technology behind that changes, and companies which are expert in that or which has a strong moat in that is what is going to benefit, and we are positioned in them. Energy transition, even in the previous call we had mentioned, is a theme for multiple years, because India is expanding very aggressive in terms of renewables energy, but there is a clear shortage of energy equipments in India, be it wires and cables, or maybe transformer, or maybe other electrical equipments in the medium and low voltage as well. So companies which have a very strong moat and are already qualified by the power grid and the governments are going to benefit over here. And companies which have already done capex and are likely to utilize those assets will benefit more than companies which are in the phase of expansion rather. So those are companies which are in our portfolio. And in the financials, we are very selective, and we have very selectively placed in some of the good names, and rather than going for very average names in the financial services. So that's how our portfolio is composed as of now, and we are confident that our portfolio composition is very balanced and is likely to generate the desired earnings growth that I talked about. So yes, Aditya, for that.
So we will quickly run down the further slides so that we can open up the floor for Q&A without taking any more time. So like I mentioned, I've spoken a lot about why active managed PMSs work better in case of passive managed funds. So we'll skip this probably. And so this is how India Winners portfolio key strategies lie in. It's a multi-cap long only strategy, like SEBI mandate. It's a minimum investment back is 50 lakhs. Discretionary portfolio concentrated to 15 to 30, like Siddharth mentioned, and with the kind of experience we have in the team, we are sure and confident that we'll be able to generate a significant alpha over a longer period of time. And like Siddharth mentioned, on a conservative basis, we're looking at a 15% CAGR return, which will be significantly on the higher side for sure. So I will open the floor for Q&A now. If you have any questions, probably you can type it in the comment box, chat section, and we can take it up one by one. अगर किसी को कुछ भी क्वेश्चन पूछना हो मार्केट से रिलेटेड, कोई स्टॉक से रिलेटेड, सेक्टर से रिलेटेड या पीएमएस से ही रिलेटेड, तो आप पूछ सकते हैं कमेंट चैट बॉक्स में। आप कुछ टाइप करना हो तो आप टाइप करके इनपुट दे सकते हैं, और हम क्वेश्चंस को डेफिनेटली आंसर करेंगे। यू कैन ऑल्टरनेटिवली अनम्यूट एंड आस्क ऑल्सो इफ यू वांट, अगर आपको टाइप नहीं करना है तो।
Yes, we can take the calls directly as well.
यस।
Hi Aditya, Satya this side.
हाय
Hi
सत्या।
Siddharth.
Right.
Hi, thanks. It was very informative. Just wanted to understand from you guys. So you said that there are certain criteria on the basis of which you are doing this active PMS management in the last 3 months. Will you be able to give some maybe an example of where you have been able to, let's say, take a call on getting out on the basis of whether it is a thesis mismatch or on the basis of some other criteria getting met, or a governance red flag or something like that? Just an example of something that you might have done over the last 3 months.
Sure, Satya. So probably I'll let Siddharth answer this, but just to start with, we've actually not booked much profits yet. We have not exited. Just one stock we've exited in the portfolio in last 2 months. But yeah, some stocks that we bought on the basis of strong thesis and they are going strong in a portfolio despite the market volatility. We can probably talk about the thesis behind picking those companies and why we are sticking to those companies. Siddharth.
Yeah. So, since inception, if I talk about, that's only one company which we have exited, and that too in decent profit in a short period of time. And the reason why we exited those companies, that particular company, was that while it's a structurally very strong story, sometimes markets starts pricing those in a manner which is not expected to you. Maybe you expect that setup company or that stock to go up in a gradual way. If markets start behaving in a what you say irrational way in a very faster, and you get get feeling that it's a valuation that again where there is an opportunity that you can exit, then it's always ideal and sensible that one should exit. So our exit towards that company was not because of any problem in the business or maturity in the business, but because of the valuation that we saw that was getting stretched. That's why we exited that company. That too in a decent again, I would say. There are a lot more companies where we are sitting in fairly decent gain, but we feel that there's nothing to worry about right now in those companies, even if they have gone up quite fast, uh, because the structural tailwinds are very strong. There's a company in our portfolio, let's say, which is into multi years of growth that is visible for them as per the management. And somewhere down the line, I'll just practically tell you that as a fund manager or as a investor, you look forward for 2 years and 3 years, but the promoter has a vision of 10 years, which is not yet conveyed to you. He might have something in mind, and somewhere down the line you also have a feeling, similar feeling for the company, but it evolves over a period of time. It is not something which can be just based on just few months. So we try to give the company enough time to prove themselves and stay invested. So to coming to your question, there are very few cases that has come to our mind that where we should book out immediately. Yes, there are certain times it might come in the future also that market will start pricing them much ahead of what we are expecting. Then we'll like to book out. We'll not wait for that company. So in those cases, it will be our return horizon. We'll look for absolute return rather than trying to hold it on for eternity. Right. So that will be on a case to case basis. And also, I'd like to highlight that right now, the economic situation globally is quite fluid. I mean, it keeps on changing very frequently. So if I have a thesis that, I'm going to hold it for multiple years, I'm going to stick to it. But if there is a sudden change in policy, or maybe a negative policy towards that, or the macro is not in favor of them and it is changing drastically, then I need to change my stand. I can't stick to that. So you have to be realistic, not just be optimistic. I would say that because, just to say, tell you, uh, right now there are multiple companies, Indian manufacturing sector, that they are dependent so much on imports of certain components that few components getting delayed by 6 months can jeopardize their capex for multiple years. So we have to be watchful about it. So uh, we are watching and taking a call. So it's not a quick decision that we take. We have a lot of reading behind that every action that we take. That's what I would say.
Yeah, understood, Siddharth. Thanks a lot. It was helpful.
Thank you.
Thanks, Satya. Anyone has any other question? You can unmute yourself, ask a question. Chat में डाल सकते हो, unmute करके पूछ सकते हो. Please feel free to ask a question. Don't feel two times about it. And the sideways trend is going, is the sideways trend is going on in the market? Yes, Amit, to some extent we are in a sideways trend within a volatile period. Market is in a sideways trend. Honestly, it's been like that for last 2 years. If you take a look at a slightly higher time frame, probably if I talk about 2024 onwards, markets have been sideways. On the upside 20, if I talk about Nifty 50, on the upside 26 300 is something that is not being breached. Another downside 22,000, 21,900 is something that is acting as a strong support zone. So yes, we are very much in a sideways market within this volatile phase that we are in right now, and we believe this kind of a sideways market is likely to continue for at least next 2 to 3 quarters more, till the time we get some kind of clarity, because every now and then we see one or two countries get into some kind of a war like a scenario, which leads to again heightened volatility. So we believe this kind of a sideways volatile market is likely to continue for at least next 2 to 3 quarters. Okay. I guess there are no more questions. We would like to wrap up the call. Thank you all for joining so much. It was a pleasure hosting you on a Saturday morning. Looking forward to many more interactions in the coming times, coming months, and with renewed energy, renewed market strategy, and the performance that we promise to deliver over a period of time. We will continue with this many more sessions and interactions with you all in person and digitally. Thank you all. Thank you.
Thank you. Thanks everyone for joining.